So Michael Burry, the guy who correctly predicted the housing market bubble, he was on the right side of a Tesla trade, a GameStop trade. He just seems to be one step ahead of a lot of big moves in this market. His 13F filing is out. Well, everybody's 13F filings are out from last quarter, but this one in particular I want to make a video about because I really am interested in following this guy's moves because, like I said, he just always seems to be one step ahead. So I wanted to show everyone the website that I use when I look at 13F filings, and there's one particular stock that he bought last quarter that I am extremely interested in, so I wanted to get into that. So right now I'm at whalewisdom.com. This is the website that I use to look at 13F filings. They do a pretty good job of making it really user-friendly, kind of making it look really nice. So you can see we are at Michael Burry's his hedge fund right here, Scion Asset Management, his page on Whale Wisdom. So you can see he's got assets under management of 638 million. Now that said, last quarter he only had 74 million in managed securities. So what that means is, even though his hedge fund has $638 million to invest, he did not invest very much of it. He invested 74 million. That's what I'm gleaning from this. I'm not a financial advisor, of course. Please let me know down in the comments if I'm getting this wrong, but I'm pretty sure here what this is getting at is he is largely out of the market or not invested long in the market. So we don't know what he's doing with the rest of this money, if he's in cash, if he's got it in options like calls or puts or what. But for the vast majority of his money in his fund, it is not invested. So of that $74 million that he does have invested, that is split across like 5 or 6 stocks. There's not very many. We're going to get into those because, like I said, there's one stock in particular that I'm really interested in. I want to talk about in this video. So right here you can see here's a list of the 5 biggest buys that he had last quarter, the 5 biggest sells, and then here's a summary of his current holdings. Right, so you can see Bristol Myers 25%, FNF 22%, General Dynamics 22%, and so forth. So down here you can see kind of a long-term snapshot of what he's been doing with his fund. It changes rapidly. You can see if you compare this to some other 13Fs, for example, Warren Buffett's Berkshire Hathaway, these bars do not move very much at all. So Michael Burry does move his investments around a lot, and that is depicted really well over here as well. Time held top 20. So his top 20 stocks, on average, how long does he hold them for? 1 quarter, so 3 months. He does not hold stocks for very long. He kind of, he sees an opportunity, he gets in, and then he gets out, whether that opportunity worked out or not. On average anyway. Okay, so just to show you guys kind of what he's got going on here. Oh, here's another good chart that shows his assets under management and what he did over the last about 2 years. So remember I said he's got over $600 million that he's managing, but he's only investing about 74 million of it long. That is shown really well here. This right here, this little dot right here shows there's 74 million of that assets under management that he has invested long, right? And it's all the way down here. Same thing the quarter before, only 41 million. But look at the 2 quarters before that. He was way up here at 1.35 billion and then 2 billion. So he was pretty much fully invested in the stock market for these 2 quarters. And then other than that, he's been kind of laying pretty low. So he really kind of chooses, he picks his opportunities. He kind of strikes right when he thinks this is the time to do this, whether it's Tesla or GameStop or the housing market crash, things like that. He really chooses his opportunities and gets in and gets out. And he's done very well. His returns are very good. So let's jump into what he has bought this quarter because, that's most significant to us right now, right? So click over to this holdings tab, and we can see down here, these are the positions that he is holding right here, and these are the ones that he sold last quarter. So, like I said, his biggest holding is Bristol Myers, BMY, and then FNF, GD, impx, GEO, and CXW. So I'm looking through all of these stocks, and they're not really piquing my interest, Bristol Myers, whatever. But I was pulling all these stocks up in TradingView, and I'm pulling them up one by one, kind of trying to see if there's one that has an interesting chart or if one's got an interesting story. And I'm just not seeing anything that I'm in love with. But I noticed this impx right here, he owns ownership. Now he's only got 9,099. I'm sorry, yeah, $9,991,000 invested in it, right? So it's a $10 million holding. It's only got 10 million bucks in it, but that is enough for 2.5 ownership, 2.5% ownership of the company. So that tells me that this is a really small company. So that's what caught my attention immediately was, why is he invested in such a small company? What does he see here? And these companies, he must really see something very special if he's only got $74 million of his $600 million in management invested in the market, right? He's investing a very small chunk of his money, and he chose these for some reason. So why these, right? And why this tiny little company right here, where if you put $10 million into it, you get 2.5% of the entire company? I'm like, okay, I need to know what this is. So I pop over to TradingView, I type it in, IMPX, and you get AEA Bridges Impact Corporation. I'm like, what is that? That doesn't finance. That doesn't make any sense. What is going on here? So I scroll down to this on this tab over here. Oh, right here it tells me market cap $496 million. So yeah, for a publicly traded company, that is a small company. So okay, it's got my interest. Go down here to the website. I click on this. And I'm like, okay, what is this? What's going on? AEA Bridges Impact Corporation. And it tells us right here what's going on. It's a special purpose acquisition company. So it's a SPAC, right? And Harley-Davidson, stock ticker HOG, the world's most desirable motorcycle company, announced that they have entered into a definitive business combination agreement under which ABIC will combine with Livewire, Harley-Davidson's electric motorcycle division, to create a new publicly traded company. Okay, so basically this SPAC is going to be Harley-Davidson's electric motorcycle division, but a new company called Livewire. So this stock is going to be electric motorcycles, EV motorcycles, right? The first publicly traded EV motorcycle company in the U.S. And it'll trade under stock symbol LVW. I'm like, okay, now I'm super interested. I need to know more about this, right? If not only is just the concept of this alone interesting, electric vehicle motorcycles, but you got Michael Burry behind it. You got him, his story with Tesla recently, and now you got potentially, I'm not going to say the next Tesla, but is this going to be the Tesla of motorcycles, right? I mean, we're talking about the first publicly traded electric vehicle motorcycle company. Is this going to be the Tesla of motorcycles, right? So for more information, visit Livewire's website. You click on this. Okay, let's go over to Livewire's website, and then you get this website. It's like, this actually isn't Livewire's website. It's a landing page for a webcast that happened, or that is happening in 10 months from now. What on earth? I don't even know what's going on there. But you go up to this links right here. You go up to Livewire. Boom, that brings you to their actual website. Okay, now we're getting somewhere. So this is Livewire's website, and I gotta tell you, this looks pretty good. It looks pretty good. This product right here, coming in at $22,000. Now the range on it, I don't know. I don't know a whole lot about motorcycles or electric vehicles. I don't own either, but I feel like this range is not that great. Now that said, I mean, this company hasn't even merged yet. I mean, they're a long way away from having their best product out there on the road. So we could see a lot of improvement come here. But it does look like a really good motorcycle to me. I mean, it looks nice. Let's hop out and look at that investor presentation, because there's a bunch of numbers in here that I really like that I wanted to show you guys. And I encourage you guys to pull up this investor presentation as well. That's why I'm showing you like how to get to all these. You should dive into these numbers because this presentation is really good. Their website is really good. Please go check these out. Do your own due diligence. So right here is the first spot that I want to stop at and show you guys. After they merge, Harley-Davidson is still going to own 74% of Livewire. That's a really big deal. So even though Livewire is going to be public as LVW, that's only going to be 17.3% of the company, right? So you have to consider that when you're investing in Livewire or considering investing in Livewire, that the majority of this company is actually not public. It's owned by Harley-Davidson. Okay, so just keep that in mind. But let's look at their projections because they're really good, honestly. I was just down here. It's a bunch of slides down here, so Let me get to it. This is one of their projection slides, but this isn't the one that I wanted to show you guys. Let's get to the revenue. I want to show you guys the revenue. A lot of slides in here. You can tell by the way these slides are made that these guys kind of know what they're doing. It's almost like they pulled these guys from Harley-Davidson to start this company, because yeah, you can tell this is just not like a startup that made all these slides. Like, this is really good. So this is the slide that I was looking at right before I made this video. So this is telling us, or these are their projections, of course, right? None of this is certain, but this is what they are projecting to do. This is their revenue over here. This is how many motorcycles they plan to sell. And I want to focus in on the revenue. They are projecting by 2026, so 4 years from now, to have $1.7 billion in revenue. Now, that is really significant for a company that's currently valued at $496 million right now, right? $9.93 stock price. Market cap is $496 million for a company that they think is going to have $1.7 billion in revenue in 4 years. Right now, of course, that's a projection. We don't know if that's definitely going to happen, but that is really significant. And not only that, it's going to be on fine margins too. I mean, these margins aren't like jumping off the page, but they're not negative. They're positive. I mean, they're looking at positive cash flow. 2026 having a 6% margin is decent. So let's compare that to let's do Hog, for example, Harley-Davidson, right? So Harley-Davidson is a $6 billion company, and in 2021 they had $5 billion in revenue at a 12% profit margin. Okay, so $6 billion company with $5 billion in revenue at 12%, and they're thinking Livewire is going to do $1.7 billion in 2026 at 6%. So you might be talking about a $1.5 billion company, something like that, a market cap of like $1.5 billion by 2026. That's a really rough estimate. That doesn't factor in hype. I mean, this is the electric vehicle space. When you look at companies like Tesla, they have astronomical PE ratios because there's a lot of hype there. People are betting on the future, not investing on what the value is right now. So, I mean, we could see the valuation of this company go even higher than that, but I think conservatively, you would be looking at, with these kind of numbers, you'd be probably looking at like a $1.5 billion company. So a $1.5 billion company compared to where it is right now, right? impx, I think, is the SPAC name right now. It's a $500 million company. $500 million to $1.5 billion is a threefold return, right? You're tripling your money. So you're talking about tripling your money over the next 4 years, and that's what they are projecting, and that's what my assessment is. Again, I'm not a financial advisor, but I think if they hit these revenue numbers, you're looking at least a $1.5 billion company. So you're talking about tripling your money over the next 4 years. So this is why I'm so interested in this company now. I found it through Michael Burry's 13F filing. I was originally interested in it because he is invested in it when he is almost completely out of the market. He's not invested in very much at all right now, at least that we know of. So he must see something special there, right? And then as I dug deeper and deeper and deeper, I just started to really like what I saw. The electric vehicle motorcycle, right? The only publicly traded one. Is it going to be the next Tesla, right? Is it going to be the Tesla of motorcycles? I mean, you guys tell me. Anybody down in the comments below, if you know anything about this company or if you know anything about Michael Burry, leave a comment down below. Let me know what you guys think about this holding or any of his other holdings for that matter. I didn't get into anything else because I wasn't really interested in it. But this one is kind of just jumping off the page at me as like, man, I think I want to be invested in this one. I'm not yet, but I think this is going to be my next investment. So let me know what you guys think. All right, that's all I got for this video. I hope you guys enjoyed it. If you liked this kind of video, I can keep doing more videos like this. Let me know down in the comments below as well. I can keep doing stuff like this if there's an interest for it, okay? Thanks, guys. I'll see you in the next one.